Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST. Every day of the week, we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. I'm your host, Beechak. I'm joined by my legendary co-host, Legendary, and we have some important information to get into today from the past 24 hours. On the topic for discussion today, majors are down across the board, 2 to 4%. DeGods and Bored Apes up 10%. NFTs showing some strength in the market here. And also big news coming from the Circle CEO, the stablecoin issuer of USDC, explaining how Apple Pay will incorporate USDC payments soon. I feel like that is very big information, but it is a bit more technical than it may first appear. So we're going to dive into all of that and more in just a little bit. But before we do that, friends, just a reminder that nothing that we say here is financial advice, because this market is very, very risky and we don't know anything for certain. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 15th of August. You are back now a few days from your extended hiatus in the States. How are you doing? How are you feeling?
GM, love your energy today. Doing quite well. It's my last day of suffering in the heat of my apartment. It's official that the cooling will be fixed tomorrow morning. Yesterday we had 39 degrees Celsius, 102 degrees Fahrenheit outside, and inside like 90 degrees Fahrenheit, 32 Celsius. And I'm telling you, it helps to bring the heat if you have these unsufferable temperatures. I still have my little cold water bowl that I have my feet in during the show, and it's quite fun actually to think about the temperance, the difference in temperature, and like how granted I took it that it's like nice and cool in my apartment.
Yeah, that's fair enough. I was just thinking as you were saying that, I think fixes are like profits. They don't exist until you take them. So you're saying, oh, it's, I can't remember what you said. It's definitely, your flat's definitely going to be fixed by tomorrow. That is like saying I'm up 100K on a trade, but I haven't sold yet. Like there's, until it's fixed, until you are cool. I'm not sure. I'm not so certain at the moment. What do you think?
It's like investing in a KOL round, and
Yeah.
TG comes and you're up 40x, unlock 10% of TG. Like the remainder, the 90% will also stay at that price, and I just made 400K with Portal or whatever. It's probably the same principle. Yeah, I shouldn't be calling it a cool day until it actually is a cool day in my apartment.
Exactly. You want to count that coolness when it comes into the bank account, basically, is my mixed metaphor for you. But look, well, let's get into all of the market stuff. As we said, kind of some reasonable movements across the board, both in crypto and on the NFT side. And then we've got some interesting news too. So a bit of a variety of information today. We're also going to be diving into some creator context, some creator strategies as part of our new sponsored segment, which is going to be going for at least 6 months, once a week. And we're going to be explaining that a little bit in just a moment. But let's get into the price action, starting with Bitcoin is down almost 4%, 58.4K. Quite a big move there in Bitcoin. ETH down also almost 4% at 2.6. And Solana is down around 3% to $142. In terms of the headlines themselves, we have the majors moving, as I just mentioned. Number 2, DeGods and Bored Apes up 10% as NFTs continue to rebound. And then finally, Circle CEO explains that Apple Pay will incorporate USDC payments soon. The CEO of Circle did clarify Circle has no specific relationship with Apple, and this has nothing to do with Apple Pay. But when we get into the technicalities of that a little bit later in the show, when we break it down, we'll explain exactly why this piece of information is so significant. In terms of some other notable sales from around the space, we had an interesting variety of usual CryptoPunk sales and art. CryptoPunk VR selling for 47.5 ETH. Sorry, it's not a VR. The 3D glasses selling for 47.5 ETH. Dmitry Cherniak gold ringers selling for 14.5 ETH. That's the one Legendary is showing on the screen. Remember, we're live on X, live on YouTube as well if you want to be watching in. And Xcopy Happy Consume. This is one of my favorite Xcopy pieces, selling for 8 ETH. So those are the notable sales. Legendary, let's head over to our NFT marketplace partner, Mintify. What is kind of catching your attention on the NFT side?
Yeah, absolutely. I mean, we have as part of the headlines the separate discussion on the Bored Apes and DGOTs, so I'm going to leave them out for the moment. But also the rest of the JPEG market has a pretty green day. We have Pudgy's up another 6% to a 9.7 ETH floor. We have Milady's back over 4 ETH, 2%, 2.5% move for them. Azuki actually with the bigger move and once more flipping Milady's. Azuki up 7% and sitting at a 4.4 ETH floor. And very, very similar move in the Doodles collection as well, which is up another 8%. So even if you look at the trending heat map, it seems to be a very, very green day for JPEGs. And that's, I think, interesting on a day where the majors are down.
What are you attributing this move in some of the JPEGs towards? Like, what's your thinking about it? I've got a little theory I want to share, which I've shared before, but what's your thinking about it at the moment?
Yeah, it's a good question. I think the move in DGOTs with which we're gonna get into, but I feel like that was quite significant for the rest of the market on the one hand. On the other hand, I feel like we had this rally in ETH, in BTC, in Solana. We kind of reached the top. We were not sure if we're going higher into uncharted territory, if we're going down. And now I feel like we've been moving sideways for quite a bit. And BTC's been actually pretty solid at holding that 60K or very close to 60K-ish mark. And when that happens, it kind of gets boring to just be in one of the majors, and then attention starts to shift to different things. And what I've also seen as a part of that is that, and we touched on that yesterday, that we started to speak more and more about JPEG collections at market as market caps and not as floor prices. And I feel like that could be significant because I feel like there's been quite a lot of resistance on that initially, which is obviously true to say not every JPEG is a floor JPEG, and you have a golden Bored Ape, you have an alien CryptoPunk, so it doesn't make sense 100% to compare a market cap of a meme coin to the market cap of a JPEG. But as I said yesterday, it doesn't need to be a perfect comparison because you just want a quick number that you can compare against another number. And I feel like if we look at some of the meme coin market caps and look at some of the JPEGs, and then some of the JPEGs appear pretty cheap, that might have caused a little shift in sentiment that we're seeing playing out right now.
Look, so that's definitely one of the ideas that I had. If you look at, just for context, going through some of the market caps of these NFT collections, Mintify has now updated all of their collections to include a section where you can look at their market cap. So Bored Apes have a $332 million market cap. Pudgy Penguins, which you're showing on the screen right now, has a $226 million market cap. Mutant Apes, for example, have a $98.9 million market cap. So I just think by reframing the way you talk about this stuff, two things are happening. One, you get a better sense of comparing NFTs with NFTs, because for some reason we didn't use this metric to compare NFTs with NFTs before. We always used floor price, but it didn't make any sense because every NFT collection has a different number. So, you know, you could have a NFT that's worth 2 ETH, but their market cap, it doesn't make it a more valuable collection than the one at 1 ETH if the 1 ETH one has loads more of supply. So it makes a lot more sense just from the NFT perspective, to be completely honest. Like, we should have been doing this anyway, is my point. But the secondary point, I think at the moment, which is interesting, is the way Frank from DGods is kind of pushing this narrative that, look, even in order to compete with meme coins, which people are calling the NFTs of this cycle, which I believe to be true because that's where the liquidity has gone, even to compete with them, it makes sense to use the same metric so people can compare attention. And I think that's where the comparison is happening. People will start to look at NFT collections and say, well, hang on a second. Azuki is like this brand. It's been around for a long time. They've got loads of people repping the Azuki profile picture on the timeline. Like, that's got to be worth something. It's a very valuable thing. People like it a lot. All these people go to these events, which people think is really cool. That market cap, according to Mintify right now, remember, there's multiple Azuki collections. That one's at a $115 market cap. And, you know, if you're thinking about that versus the coins, you know, coins can get to 200, 300, 400, maybe with a lot less in terms of like real life community that can move the needle both online and in real life. So look, it's kind of a guessing game because none of this stuff is easy to value, but I guess you can only value by comparison. And then maybe people will start to look at the NFTs and be like, hang on a sec, they're actually better than the meme coins right now. And the final point, which is about, people went through this kind of nihilistic phase where everyone was talking about the VC coins and how all these people were going to dump on them. It's like the NFTs relative to either VC coins where there's loads of insiders, or frankly, these meme coins where there's loads of insiders at the beginning, or people who've sniped the.
Is it just me, or is B gone for everyone? Funky Tiro, can you hear him? Nope. All right, then I shall take over. Noah, NB, I saw you kind of disagreeing with Beachik's take a bit, so I'd be quite curious to hear from you. We haven't had you on the stage for quite a while to hear your thoughts on the market.
Good morning, sunshine.
GM.
Yeah, hey. Yeah. So I got a ton of energy. I don't know. I really don't think anyone cares about like what the rest of everyone else sees a PFP doing.
Yeah, fair enough. Fair point on that. B, I think you're back with us now, and you had one final point to make before you froze on us.
I can't remember. I was in a bit of a flow. I was in a good flow.
Then I have a question for you, actually.
Okay.
Seen this post by Beanie, and Beanie was saying he's pretty certain that the NFT season will happen on Solana. Just an insane amount of development going on there. Plus, it's got the degen culture locked in because of the meme coin culture that's there. He also thinks that Base might be a contender. That's not the question, but he sees that ETH mainnet NFT projects will have and still have an uphill battle, and that we could see a return of the NFT season more so on Solana. How do you feel about this take?
I don't know is the truthful answer. I do think that there are certain NFTs which, look, I don't think NFTs just have a resurgence just for the sake of it on Solana, like because they're in direct competition with the meme coins. So while I take NB's point in the sense that, look, maybe people don't prescribe a huge amount to the IRL stuff. I think there's some value in it. Given that the way we are valuing value in this space is all quite challenging and it's not completely obvious how we're doing it when it comes to random memes that we're creating. There's obviously like some value in it. But in the end, these meme coins are in competition with the NFTs. So I don't know if, I think if they're going to go to the NFTs, there has to be some meme-like quality to the NFTs and some community that is basically participating in the meme coin game as well that makes it relevant. And this is, again, like when we're talking about art and we're talking about like fine digital art, I think that is actually still existing. And I think that's got a strong use case and a strong point. So that's kind of separate to all of this discussion in particular.
Yeah, that's a very fair point. I saw that NB had his hand up and probably want to come back on that.
Yep.
Noah, go for it.
Oh, okay. Yeah, no. So I don't know. I really don't think that the PFPs have any kind of like standing left to them. Mostly on the standpoint of like they do. I don't know how to say this, but like from a utility standpoint, from activities and stuff, I feel like you can get more from opening a credit card than you can from buying a PFP by means of utility and benefits.
Do you know what? No, you brought that up last time, and I actually agree with you in some respect. Like the way that people are trying to provide utility seems to be like some type of loyalty program, right? Like it's basically a club with a particular set of loyalty points and program. However, the thing is, the market, I think, is disagreeing in the sense that you can just scroll down the list of the top PFP collections, and all of these have multi-$100 million market caps, or many of them do. And the other thing that I'd always point to when people kind of raise questions about the social NFT side of things is that on the lending side, like that's where people are willing to lend the most. It's either because it's high liquidity. like it's either on the very, very fine art, like the CryptoPunks or the Fidenzas, and that's where people, or autoglyphs, that's where people are more happy to lend because they're more confident in those high value assets, or people are willing to lend on these social ones where there seems to be a lot of liquidity. So sometimes, yeah, I kind of understand the question mark against it, but at the same time, the market seems to be saying like, look, people value this very, very highly.
For the speculative art kind of side of the market, that the lending is like a huge issue to me, just in terms of like they are way too confident in the current price of some of these assets. And long story short, what I'm seeing a lot of collectors do is that if they want to get out of one of those speculative assets that don't have a current active offer, they'll take a loan on or whatever it is on one of the NFTs, and then they'll use that cash as exit. Does that make sense?
Yeah. Yeah, for sure. That is definitely, I mean, I don't know if you saw his post from Cyrus yesterday, but there is a lender who was lending against CryptoPunks. I think they did 10 at around 90K, and they were basically down almost a mil because the borrower, sorry, just didn't pay back, and they've all got liquidated, and the price is much lower now. So I definitely agree with you that people, particularly who've been lending in ETH, have probably got wrecked. Think of all Chromie Squiggle Floor was above 10 ETH for a long time, and people were very confidently lending at 6, 7 ETH, 8 ETH for like 1 year and 2 years. So a lot of those loans haven't even come to the time they need to be repaid yet. But as you know, the floor of Squiggles is much lower than that. So I definitely accept that point in particular. The lending market is a useful thing to track because it gives you a sense of where people are willing to put their capital, but sometimes the lenders get wrecked, and that has been happening sometimes.
Yeah, absolutely. And it's what it also shows is that still the NFT topic is interesting to people. Like just looking at the space, people joining on stage, having their hands up, whereas that's not the case with, say, the more technical things, with the infrastructure things. People still love to talk NFTs. I saw that Raheem joined us on stage. Omega, who I think hasn't been up before on stage, joined us too and has their hand up. So Omega, I want to go to you first for a quick take on what we've been discussing so far on the NFT market.
Yeah, hi. Can you guys hear me?
Absolutely, yeah.
Perfect. Yeah, a few thoughts here, just to go off of what NB was saying. So over the past 2 years, I guess a little bit of background. Prior to this, I was a TradFi manager, fund manager. Now I'm trading my own book. And during the last cycle, I was part of an analytics group called Origins. A couple people in the audience might know I see airports in here. Just on the topic of NFTs, how I'm using, what I'm using to gauge health is using the watch and luxury market, fine art, basically anything that's considered a Veblen good as like a proxy. So if you talk to watch retailers or watch resellers, you can see that as a function of liquidity. And so back in March, sales ticked up, and then now everything is trending back down. Same thing with fine art. On the topic of utilities for PFPs and all that sort of stuff, I mean, I think the conversation becomes a lot more nuanced. But at the end of the day, like all of us are rocking apes, punks, penguins, Azukis, because there's like a certain level of social clout, and that's been pretty proven, which is why I think using these sort of other more traditional luxury markets as like a sign of health, how much people are willing to spend on luxury goods, on flexing, will give like a pretty good indicator in terms of where we are in terms of like NFT health, in a very long-winded way. I wonder if anyone else has any thoughts about this.
That's actually an interesting take to compare to the watch market. Like I myself am a smaller collector of watches, but a couple Rolexes and a P in my collection, and definitely been tracking those prices, and they have been down, which seemed to coincide a bit with the NFT market. However, I would say that the watch market is more, and obviously so is the fine arts market, more established as a luxury market. So for that comparison to to be able to extrapolate that into the future, we would also need to see NFTs coming back stronger. You at least need to smoothen out the initial hype that they had, and then it would be probably interesting to see that if JPEGs will stick over the next 5 to 10 years. Probably not the same collections, but other ones, if they still will be treated as Veblen goods by the market or not. I think it's an interesting way to look at it, but I'm not sure if this is gonna play out like that. Raheem, you've had your hand up for a while as well, my friend. Just wanted to hear your thoughts on our discussion so far as well.
GM guys, super nice to have you back, Legendary, to the space.
Thank
I
you.
had a couple of thoughts in terms of what like NB was saying and something Omega just pointed out. To me personally, I actually think a lot of NFT PFPs at least have started to act like traditional collectibles, which is in like what Omega was saying, especially if you go down the comic book route or like Pokemon cards and things like that. Because if you look at that market, it's not like you have big like Marvel movies coming out, big Pokemon shows coming out that overnight like some of these collectibles absolutely run. And I think like a good comparison of it is you can see that in Doodles. Doodles have arguably had like some of the most bullish news in the recent times, and they haven't had like a ridiculous price action. Personally, I think this is great because in the long term, you need to have people buying things generally in collectibles with like more long term perspectives. And this is something you see in like people who buy a lot of the rings related stuff, like a lot of the anime related collectibles. And I feel like that's how we are seeing it. To Beechek's point about like loans from Squiggle DAOs and things like that, I think a lot of these loans are, again, like, when people were lending this, we were still at the end cusp of the euphoria market of 2021. And you see this in all, right? Like Omega spoke about this in like watches. You see this in Dubai, like in the real estate market. Dubai goes in like very massive cycles of the influx of people that move to Dubai at the end. But at the same time, Dubai has a lot of land. So we go through massive cycles of properties in that way. So I personally think like one of the most important data metrics, which I feel like we don't talk about enough in this space, is if you look at three ecosystems. So you look at Ordinals, you look at Solana NFTs, and you look at ETH NFTs, and you just compare of how down Solana NFTs are from January of this year to what they are now compared to ETH, and do the same thing with Bitcoin. And you will realize in terms of like the percentage value that a lot of Ordinals and Solana NFTs have gone down a lot more. And I think there's a question to ask, why is that? Because I think like ETH NFTs have had a variance of time, which I personally think collectibles need to have a lot. That's where you get like more prominent holders. And I think that's what you started to see in NFT PFPs. And I think long-term from a collectability point of view, that's how it should be.
Interesting. I like that perspective to compare how much ETH NFTs are down versus NFTs on other ecosystems. Noah, you have your hand raised. Let's put a wrap on this topic before we move on to the next segment.
Yeah, quick case for NFTs and art. In the 90s, a long history of digital art history. But in the 90s, there were three main issues that were identified in terms of why hasn't digital art like caught on mainstream. And one of the main ones was archivability. And only as of recent, we've been able to solve that one issue of archivability, where prior to that, artists were putting things in glass. They were trying to figure out, how do I extract the code? And like, how can we make this work so that it can actually be adopted? And we're making crossroads in that. And within the last 6 months that are really exciting to see. So I think there's a long history that's in the future for digital art, maybe not as speculative as it was, but from back to the point of the PFPs, like my Amex is way more of a flex than any pudgy penguin's ever going to be. I get in airport lounges during Art Basel. They have parties. Like there's a concierge on the back of the card I can call. I've never done that, but they exist. Like the amount of utility that Amex offers me for free for well, it's not free, but you know what I mean. But and then versus like what versus what I can get from a PFP from a utility standpoint, they got to offer something more at this point because utility ain't gonna cut it.
Don't do it. Don't call the concierge. I did that with my American Express. It didn't work out in my favor.
Do they charge you
I
for
largely
that?
agree.
Like, well, I've never ever tried that in my life.
It's like once a collection starts adding utility, it starts becoming cringe, right?
That's all it is. That's all the collections are, utility though. Like you can't say like it's like IP. It's not IP anymore.
Yeah, I
Yeah,
mean,
it's in,
I have a few, sorry, go ahead.
go ahead. Final point, and then we're gonna wrap into the next segment.
Yeah, I guess like on a more hopeful note. So I actually got into crypto through NFTs because I thought that the market participants were dumb, and so there was a lot of alpha. What I've actually found, though, optimistically, is that a lot of the same people, I think, a lot of people that have the same thinking that like succeeded in trading NFTs, a lot of them come from like ecom backgrounds, collectible backgrounds.
Sure.
And like how that's translated over the past year has been like they're the ones that are cooking the most on meme coins. So I think there is a hopeful message here where it's basically, you know, just be adaptable, you know, keep trading things. Markets are always going to be pristine. There's always going to be a new opportunity, which I think is one of the highlights.
Yeah, I like it. I think that's a nice message. Like there'll be liquidity bubbles. Yes, things will get overinflated and then they'll be underpriced, and we just got to roll with the punches. I do. And on that optimistic note too, I think the NFT asset, the NFT ecosystem is an established and maturing asset class, both on the PFP side and on the fine art side. Frankly, I think the market has proven that to be true. Yes, one might be a little bit less liquid. The social side is a bit more liquid, but you know, we'll just treat them slightly differently, and they're definitely established. So we'll obviously keep monitoring this and reporting on it and debating it as we go through. There is something to Legendary's point before, which is like, you know, when you start talking about the NFTs, people care more. And I think I saw, was it Seed Phrase or someone else tweet, NFT communities are greater than meme coin communities. No one can convince me otherwise. The market caps might be higher, but when it comes to people caring about the animal or what that brand represents, it clearly means something to people, right? It's a bit intangible, but it does mean something. But look, we're going to keep monitoring that stuff. We've got some other things to get into today, as well as the main headlines. But first, we want to get into our sponsored segment. It's a new sponsored segment. This is our weekly entrepreneurial segment, Publish and Profit, where we explain some of the key secrets and tips to making money online as a creator. In today's segment, we focus on one of the most important principles for me personally, which is getting into people's routines, which by far and away was one of the biggest factors which helped us at the beginning of our journey. This segment is brought to you by Lil Nouns DAO, an expansion DAO based on the famous Nouns DAO who fund cool creative endeavors which can proliferate the nounish meme. So there are three main reasons why it's important for you, your audience, and your profitability to get into people's routines when you start out. This is based on all my experience creating online for about 3 years. Number one, for you, you build a strong habit which you can repeat. I hear a lot of people think that a routine is in some way in conflict with their freedom, but I have news for you. You are wrong. The beauty about building a routine as a creator is that you have full autonomy about what routine you create for yourself. You can do mornings, afternoons, or evening. You can do once a week, once a day, once a month. It is completely up to you. But you do have to recognize that the more you do, the more reps you do, the more powerful a habit you build, and the faster the returns will come. And actually, the easier it will be to comply with the routine because you yourself actually get into the habit faster. Number two, for your audience, your content becomes something which they can rely upon or that they actually just need. You have to think about it from your audience's perspective and want them to think that on Monday at 8 a.m. Eastern time, I've got to join Cap and Steve in Coffee with Captain. Or it's 9 a.m. Eastern time, I want to hear what Signal or Easy and Clemente have to say on the Daily Bone. There are a million things competing for people's attention every day online. So it's imperative that before they hit the timeline to discover what's going on that day and to get distracted on whatever is going on, they already have some sort of inbuilt routine and allegiance to you. You can only build that by providing value routinely. In the end, if your content is good, it's much easier and more efficient to keep people inside once you get them through the door than always trying to get more people through the door. And finally, for your profitability, your content is able to produce routine results which can be measured and verified by potential sponsors to weigh up how much it is worth. This is absolutely crucial. Imagine the pressure you'd feel if you were a host who doesn't produce routinely, and then you are asked to run a sponsored space, but you don't know if anyone will specifically turn up at that date and time. it's of course possible to just go live and for people to join, but your sponsor won't have a routine record of the types of numbers and people that they can expect to join. And that is the final point. It's not just about the quantitative aspect in terms of the numbers. Sponsors are interested in the qualitative aspect to understand who exactly is joining and knowing if that is a good fit for their brand or company. So those are my 3 reasons for why I think getting into people's routines is so important for any online creator who wants to be prolific and profitable. With a huge thanks to Lil Nouns DAO for sponsoring this segment. Lil Nouns DAO have sponsored me for multiple multi-month deals, and there is an active DAO voting process going on right now for various proposals. So if you're curious about contributing to a cutting edge DAO and getting paid to bring your ideas to life, definitely check them out. Legendary, which part of this message resonates with you the most and why?
Absolutely love the post. I think number one, that you build a strong habit which you can repeat, and that you say, it's wrong that building a habit or building a routine is limiting your freedom, because I used to be in that camp myself. Like you're a very structured person. I am definitely not. I'm definitely the opposite of that. And I told you multiple times, I can't have a day where I would have calls from 6 a.m. in the morning to 10 p.m., which used to kind of be my work life in banking or in consulting. And I was like, I'm done with it. I don't want to do that anymore. But I can design a routine that works for me. And, for me, the day basically works out like that there is a pre-show day and a post-show day. And I know there's stuff I want to get done before the show, which includes prepping for the show, but also going to the gym, making sure I have, all the supplements I want to take, all the food that I want to prepare and cook, etc. So that's my AM, getting some research done. And then I know there's the show, and then I know there's the world poster show where I do have to, hop on a couple calls, talk to some people, or do other stuff. And that's a routine that has this habit in the middle where the show is the centerpiece. And for the rest of it, I have the freedom to move around and shift around as I please. But I know that if I hadn't, if the modern market weren't a daily show, I would be way, way less structured than I am right now. And again, I'm not like confining myself in planning my day by the minute. And some people do that and love that. And, Gary Vee allegedly is famous for that if you get a meeting with him, it can be from 1 p.m. and 7 p.m. to 12 p.m. or something like that, because he plans down to the minute. And I know a lot of people who do that, but that's just not me. So you can't keep your freedom, and you can build the routine in a way that it works for you. And also, your last point, I'm going to keep that a bit shorter, on the profitability, on actually if you have a spaces or a content format that is regular, that your audience is used to, you don't have to worry about people turning up. Like, we don't have to worry when we do a segment that on this show of the modern market, there's only going to be 10 people listening in or whatever. Whereas if you don't have that, and you actually have to go around and ask, 30 friends, hey, can you join my spaces? I'm doing a sponsored thing with whomever. Can you be there? I need that, yada, yada. That's just annoying. It's just a waste of time after a while. And I wouldn't want to do that. And I don't want to worry about getting people on the show. I'd rather be focused on, delivering a great show with you and Sammy and Brad.
Yeah, two more reflections on that. One, on the and this is probably going to appear in another segment. So this is looking forward into some of the other content we're going to be producing on this, as we kind of give an insight into how we built what we've built and how we've become more profitable doing that. But it's so much easier to build. This is like the key phrase for me that I was thinking. It's so much easier to build and sell a platform than sell yourself. And what I mean by that is, if you just operating on the timeline or just in a video or just, in standalone instances, when it comes to monetize, you're going to have to monetize the timeline. And for whatever reason, people don't like seeing sponsored tweets or sponsored standalone things as much. What they don't mind seeing at all is thoughtful integrations into already existing content. So if you're reading the snapshot every day, people don't mind seeing a section which is sponsored by something that's far more familiar with some of the traditional media that they consume. They see it on TV, they see it in their favorite YouTube videos, they see it all the time. But the standalone tweet that is just selling something or selling a coin or selling a product, it just doesn't work as well. So building the publication instead of building the publication so you can sell space in the publication is so that you don't have to sell yourself. And I think that's one of the crucial things that I think about a lot. And then the final point, Legendary, do you remember the time when we did one show per week ages ago when we were doing the airdrop season spaces? And I always remember this, like when we only went once a week, and look, I'm not saying that every single person has to go daily. It's obviously harder to go daily and you have to be wired a particular way to want to go daily. But it was really funny that every time we'd go daily and we were starting out, by the time I'd waited 6 days to then go daily again, I would feel nervous again. I would feel nervous because I was not getting in enough reps. And so like I would do the one show, I would feel kind of good about it. And then 6 days later, I'm like, I'm out of practice. I was like, I kind of didn't know what to do. Yes, we're going through the routines again, and ultimately they would go fine. But that space and time before the next show was just too much time. And I think converse to what people think that if you go more, it's harder. Actually, from my experience, by going more, it gets easier because you're getting more reps and you're like just training yourself to be executing all the time. And now I'm pretty sure you can speak to this, like it's a walk in the park now to go daily in terms of executing. Like there's no thought about like, oh, how am I going to host today or who's going to be there or whatever. Do you know what I mean? What's your thoughts on that?
Absolutely agree with that. Like if you think about Malcolm Gladwell, and who says that building a skill out, being like excellent at something takes you 10,000 hours. And this is show number 322 for us. So like, even if you benchmark that against this metric and our show runs for 1 hour, we are like far, far away from getting 10K hours in live streaming. But if you were to space it out as a weekly show, then you would get 52 hours per year. That's 520 hours in 10 years. That's 200 years until you get 10,000 hours of live streaming. It's basically not feasible to get to that number if you just stream for 1 hour a week. So definitely agree with you on that. Also see that Noah has his hand up on that topic. Quite curious to hear from you.
This segment is brought to you by Little Nouns DAO, an expansion DAO based on the famous Nouns DAO who fund cool creative endeavors which proliferate through a nounish meme. Oh yeah.
There we go. And I've got it on my t-shirt as well if people want to know. And next time I'll show it on my t-shirt. I don't know if you're watching in at the same time, and then you'll read it in that voice, okay?
I just love the ad reads.
Love it. And we one thought on that, because you mentioned it too, Bijik. We do track like how our audience numbers evolve when we have a sponsored segment. It's something we talked about yesterday as well, that we want to make it as native as possible. And actually, this segment on X, at least in the spaces, started out with 100 people listening in live, and now we're up to 124. So still climbing. People are not dropping out, and that's something that's always been important to us. But I've also seen that Captain has joined us on stage, and I know, Captain, you will have to run very soon to your own spaces. So I'm giving the mic straight to you to hear from you.
Appreciate it. No, thanks for having me up. I just wanted to double tap on everything the two of you were saying. I couldn't agree more in terms of, for me, daily is far easier than any weekly routine. And the idea of sponsored segments being greater than, a sponsored ad is something that is, I don't know if I ever gave much thought to prior to becoming a content creator, but we followed the same roadmap. And I actually sent a tweet out yesterday about it. Like, we've gotten great feedback, not only from our sponsors, but also our audience, to your point, to the point where they now will come to look forward to some of these segments, just like I'm going to look forward to this one. Like, I think this is a great segment. And I love that it's sponsored. Like, it's like, as a fellow content creator, like, that's exciting to me that you're crafting segments that your audience will like. And if you do that, your sponsors will likely like them as well. So yeah, I just wanted to quickly come up, double tap everything you were saying. Appreciate all that you do. I've certainly taken inspiration from it. And for as much as I agree with everything that you guys have said, I also equally strongly disagree with everything NB said.
Love it. Appreciate it, Cap. As you say, it's such a crazy thing, isn't it, that going daily is easier? And so many people will probably fight against that idea because it's so counterintuitive. But look, you've got two sets of people who run their own daily shows confirming that. So it must be true. And as Cap said, whatever NB says, you gotta have the question mark against it, most likely. But appreciate you, Cap. Thanks for jumping up with us. Legendary, shall we hit the Web3 roundup to get people up to speed with everything else that's been happening in space? Then we've got one more important headline, which I think you definitely want to break down.
Let's do it.
Let's do it. So in terms of the Web3 roundup, coming from the snapshot, which is pinned up top, we have MetaMask and MasterCard launching a debit card that lets you spend from your Ethereum wallet. That should be fun to check out. Sling Money, a stablecoin-based global payment app, raises $15 million in Series A. Lido's restaking platform Symbiotic launches Bitcoin restaking. Renzo Protocol launches an LRT for Solana. I'm putting the question mark up against all of this restaking stuff at this point, Legendary. People know I've been a big restaking advocate, at least for getting all the airdrops at a minimum. I'm putting a big question mark up against all this stuff where I need to research a lot more of how it's even working, that you can just start throwing random assets into this restaking pool. I don't know how it works perfectly. I'm throwing the what's the color flag? The white flag? No, I'm throwing the flag on the field for this. This is the challenge card. In some other news, Morgan Stanley reports owning 5.5 million shares in BlackRock's BTC ETF. Eigenlayer announces plans again, part of the same thing. Eigenlayer announces plans to allow ERC20s to become a restakeable asset. Literally any. I don't know how that works, so let's find out. That's pretty important. And then finally, Sotheby's on the art side announced new digital art sale, saying this is one of their most diverse digital art sales yet. That is the Web3 roundup coming from the snapshot, which is pinned up top. Legendary, I think you want to get straight into one of the final headlines for today. This stuff about Apple Pay, Circle. What's the relationship here? What's the proper breakdown? Because I think there's been some misconceptions on the timeline.
Yeah, absolutely. The timeline, at least for me, kind of showed or insinuated that it's a partnership between Apple and Circle, and that they are partnering up to basically make USDC payments working via your iPhone, but that is not the case. And to actually understand what's going on, I think it is helpful to take a look at the article in the Apple newsroom, because they are opening up their NFC transactions for developers in app. So basically what that means is that with the new iOS update, developers will be able to offer NFC contactless transactions using the secure element from within their own apps on iPhone, and that is separate to Apple Pay, that is separate to the Apple Wallet. Basically, you could not do that before. You could not integrate NFC payments in your own app. You had to either use Apple Pay or Apple Wallet, and that was obviously only working for partners like airlines and other providers who you could have added to your Apple Wallet. And Jeremy Allaire, the co-founder of Circle, has also added a bit more context to that, and it's been very specific to say that Circle has no relationship with Apple, and this has nothing to do with Apple Pay. The news article, which you should read, spells out what Apple is doing. That's exactly the newsroom article that we went through just a couple of seconds ago. And until Apple did this move, again, the only payment app or wallet that you could use on NFCs with using NFC on iPhones was Apple's Wallet or Apple Pay. And basically, this is now opening up. And the way it works is that you actually have to apply for that to be able to use that API integration. And you have also, there's also a financial component, obviously, that you have to pay for that. And that is what Circle is planning to do. And this is how potentially USDC payments would be able by basically facilitating this new open infrastructure. But again, not as a result of a direct partnership of Apple and Circle, which is not the case.
Okay, so I think that's a really important distinction, right? It's not a direct partnership, but changes in the background, technical aspects of it mean that USDC transfers might be facilitated. Two initial thoughts or two reactions to it. One is, feels like, I don't know practically how in other parts of the world that are already using stablecoins a lot more, like what the wallet experience is for that, whether it's mobile, whether it's otherwise, but I've heard that a lot of people around the world are already using Tron. For example, I think in Argentina, they use Tron and they're using stablecoins pretty routinely. So this is not necessarily revolutionary in the sense that payments have never been done with USDC for IRL transactions. I think the different parts of the world that have struggled with their currency and with inflation have been kind of turned this on. a little bit of time ago, but obviously the Europe and the States have been slower to try to facilitate this kind of stuff.
I'd have to, sorry for cutting you off, but I'd have to disagree on that a bit, because I
Okay.
thought that it works exactly in the same way until I had a conversation with Austin from Say, who was actually living in Argentina, and I basically
Okay.
him for 1 hour to understand how that works, because I thought the same. You go to your grocery store, scan a QR code, and send stables via Tron to pay for your stuff. But actually, nobody's doing that. The way it works is
Okay.
they use a centralized exchange. They have their USDC stored there, and whenever they need that, they sell it off in P2P with a peer-to-peer transaction, and have that immediately transferred to their regular fiat bank account, which runs in the local currency. And then they do the purchase as fast as they can, because obviously with hyperinflation next week, the purchase power could be way, way lower. So it's basically on a per need basis that they sell off their USDC or whatever stablecoin they use on Tron on Binance or another centralized exchange, have it on a bank account, and then just pay with a regular credit card, because you don't really have crypto native payments in Argentina in many, many places. So being able to actually at scale straight away spend your USDC on your iPhone from that app integration would be pretty cool. I think the closest right now that comes to it, it's what many people in crypto are doing, is just using crypto credit cards that you can top up with whatever currencies from ETH to stables and just pay with those credit cards, which in reality works out that you basically use your stable stack, take a loan out against that in euro, in fiat, in pounds, in whatever currency, pay your stuff, and then you repay that loan in the app with the stables or other currencies that you had deposited on that. And the way that works, for example, Nexo is doing it like that, is that why you want to use stables is obviously because they have the highest LTV, the highest loan to value ratio, which means you can borrow 90% against your stable. So if you deposit 10K USDC, you can borrow 9K against that and spend it on your credit card, which is a regular MasterCard.
Interesting. I like it. I think that's really interesting additional context. Very helpful to kind of learn about how it's practically working out for certain people. One question I had from there, this is part of the second reaction, is I think crypto people in general are a relatively paranoid group of people. There is the bigger discussion about privacy, which is taking place, and how that should best operate on a public blockchain. Do you have any thoughts or reflections? Well, one of my initial thoughts and reflections is, look, there's a certain amount of your capital which you either do from a corporate thing, and maybe you report those via your corporate accounts, and that will have to go through your kind of corporate centralized exchange, and then that hits your corporate bank account, and then that all gets done like that. There's a certain amount which you'll be doing under your personal name potentially, and that stuff you report as part of your normal process too. However, there's also a certain amount which you want to go through. Well, you have to go through your normal process if you're abiding by all the laws and regulations from wherever you are, but you also don't have a requirement to have other people know what you are spending on in real life, in the same way that with cash, or at least in an economy that still uses cash, you're not obligated to say or have people know what you are spending your cash on. When it comes to the digital side, yes, people can track all that stuff all the time now, but there is an economy which is private in the sense that, you know, you can spend your cash in the way that you want to without. So I don't know perfectly how that fits in a blockchain economy, in a public blockchain economy, where you then start to tie your personal wallets to your bank account, which on some level will be super helpful because it means you don't have to keep going through this process of, you know, going through a centralized exchange, hitting the bank account and going through all that nonsense. But on the other hand, it's like, well, now you have my wallet and now you can just see every single thing that I'm doing all of the time. So even if you are complying with all the stuff, you've just lost your privacy on some level. So do you have any thoughts or reflections on that, Legendary, as, I don't know, I guess people are trying to figure through that?
Yeah, that's a very good question. I mean, you can make the argument that basically centralized exchanges are already in that position, that they know what you're doing with your wallets if you use those wallets to deposit to them. And now that
True.
would be more people. It's also like a very cultural thing. Obviously, the United States loves to pay with the credit cards. Austria, for example, loves their cash. I think we still do like 55% of transactions in cash, where that's like going for grocery shopping or restaurants, etc. And it's still common for places in Vienna even to be cash only, which I personally find that not a good tendency. I feel like at least you should give people the choice. That's a recent thing that I learned from being in the UK so frequently. For example, if you're taking a cab and their card reader is broken, they are not allowed to operate. They have to make sure they're legally bound to make sure that at all times they can offer you both a cash transaction as well as paying by card. They cannot operate if one of the two is not working. I mean, taking cash will always work, so it's only when the card reader doesn't work in reality. I am the one who like would lean more into, I'm not the biggest fan of cash. I love the convenience of paying with my phone or with my Apple Watch, but I do understand everyone who has like privacy concerns about that, and I also do understand that different jurisdictions have different degrees of freedom. Like in Austria, I personally don't worry about criticizing the government, criticizing EU regulations, posting that on X and saying things that I don't like, and I'm never afraid that someone's gonna ban my bank account for that, and I can't get groceries or whatever. Whereas I do see that might be a reality in different jurisdictions. So I am not the one to say ban all cash for those reasons, because different people, different countries have different needs when it comes to payment systems.
Interesting stuff. I think that's really interesting to have that conversation. I think the privacy angle I believe it's one of the things Vitalik is pretty hot on. He thinks it's quite important to try to come to some kind of conclusion on it. Not necessarily conclusion, but like start a process where people try to figure out what would be a reasonable way to have some financial privacy from anyone, to be honest.
Yeah, I think this is where zero knowledge proofs also can come in, right? If you can use ZKPs as a way to demonstrate that you are worthy of getting a specific loan without having to disclose that, look, this is my wallet where I have 10 million stashed in USDC and whatever, but you can do that with a zero knowledge proof. I think that at the moment, at least, this seems to be the solution that we like to take in finding the balance of privacy and smooth operation and trustability.
Love it. Either way, it'll be interesting to see how that progresses. It's inevitability, I suspect, that's going to be coming to a lot of us. And I think it will make our lives a lot easier when you have a significant amount on chain instead of in bank accounts. So probably be a net good. At least it'll be making our lives easier to some extent. So look, a very interesting varied variety show today. We touched on the NFT market in great detail. Nice to see a lot of people still passionate about that. We touched on the Apple Pay /Circle news. I thought that was helpful, as well as doing a bit of a deep dive into the entrepreneurial aspects of running a creator business, a new segment which we'll do once a week. Once again, shout out to our sponsor for today, Lil Nounsdale. They're awesome. Community looking to fund interesting individuals doing cool stuff, trying to proliferate the Nounish meme. Thanks so much to my legendary co-host, Legendary as always. Thanks so much to our contributors today. We had NB, we had Legendary. I don't have my phone with me. What were the other names?
We had Omega.
Omega.
I'm blanking.
I'm Rahim.
Yeah.
Good stuff. Excellent contributions. Thanks so much for joining us. We will be back as usual tomorrow. Have a great day. We will see you on the other side. Bye-bye.